Hello, everybody, and welcome to exercise 17-28. So on August 15th, 2019, Outkast Company invested its idle cash by purchasing a call option on Counting Crows common shares for $36 per share. The notional value of the call option is 400 shares, and the option price is 40. Okay. I'm sorry, this is actually, it's going to say 360. So this is not actually 36. This is actually 360. There was a cutoff on the screen. So they purchased, and this really refers to, so this is going to be 360. The notional value of the call option is for 400 shares, and the option price is at 40. The option expires on January 31st, 2020. The following are available with respect to the call option. Now, what you'll notice is when we went through and did this for exercise 17-24, what you'll notice is I really created two T accounts. My first T account was going to be over here for the call option time value. And the second one is going to be what we call our call option fair value. And then lastly, we're going to also have unrealized holding gains and losses. Okay. So when we originally bought this option, let's give ourselves a little bit more room. So when we originally bought this option on August 15th, I'm debiting the call option time value for 360, not 36, but for 360. And I would go down here and I would be crediting cash over here for 360, and this will be on August 15th. Okay, so how would I go through and record the investment in the call option? So the journal entry on August 15th, I'm debiting call option time value. I'm crediting cash over here. So this is to record the purchase of my call option or my investment of my call option. So the second one here is that Outkast is preparing financial statements. Okay, so when they prepare financial statements on September 30th, the time value of my call option is now at 180. Okay, so this is as of 9:30. So to reflect the change in this value, what I'm going to do is I'm going to credit the call option time value, and then I'm going to debit the unrealized holding gain loss over here. Okay. So that's what I'm going to go through and do over here. So this is to show the change in the time value of the option. However, this option has value now because I paid basically for $360. I got the option to buy 400 shares at 40. Now the value of these shares are now at $48 per share. So for September 30th, right, the fair value of the call option is going to be 400 shares market price per share is at 48. So my total value over here is going to be 19,000, or I should say it's going to be 19,200. Okay, now, and actually, if I'm looking at this, I probably want to look at this more from the standpoint of saying that, okay, so I can buy 400 shares at a price of $40 per share. The market price is at $48 per share. So my increase is going to be at $8 per share. So if I multiply this by the increase, this is going to give me kind of like the fair value of the call option. Okay, so the fair value, or what this option's worth, is 3,200. And why are we saying it's worth 3,200? It's because I would buy the shares at 40 and I could sell them for 48. So that's going to be an increase of $8 per share. When I multiply the $8 per share times 400, I'm going to get 3,200. So the fair value basically of this call option is going to be, now it's going to be at 3,200. And I have an unrealized holding gain or loss at 3,200. So when it comes to reporting this on my September 30th, 2019 financials, what do? Well, the first thing I need to do is I need to adjust the time value of the call option. And this is going to be over here for 180 and 180. Remember, the sum of these two values is what equals the total value of the call option. I'm breaking this out because it's going to be a lot simpler to go through and decipher the two by doing it this way. So right over here to record lapse of time value. Then over here, I'm then going to do over here call option fair value of 3,200. I'm going to have an unrealized holding gain or loss in the same amount. Okay, so to record change in the options fair value. And I'm just going to pause really briefly just to check my work. Okay, so I've prepared the financial statements as of September 30th. These would be the entries I would need to report. Now I get to December 31st, 2019, I prepare the financial statements. So there's been a change here, right, in terms of the fair value of the call option, right? So this over here at December 31st. Right, this per share hasn't changed. My strike price, my option price per share is at 40. However, the market value is now at 46. So this is a change of $6 per share. So over here on December 31st at 400, my amount here is now going to be at $6 per share. So the fair value of the call option is going to be 2,400. So when I go to look over here at 12/31/19, the fair value is going to be at 2,400. So when I look at this particular T account in terms of saying, okay, what do I need to do to get from 3,200 to 2,400? This is going to be an adjustment on 12/31/19 of 800. So this 3,200 minus the 800 is giving us the 2,400. So I have two parts of my valuation. I have the fair value and I have the time value. So coming over here on 12/31, my time value is now 65. So what I need to do here is to make this adjustment, and this is going to be an adjustment of 115. So one of the things I forgot to do is when I was looking at this one over here, I was debiting, so I was crediting the call option fair value. So over here, I would credit my unrealized holding gain or loss for 800. Then on this part here, this is my adjustment as of 12/31/19. I would be again debiting my unrealized holding gain or loss. So that's what I would be going through and doing as of December 31st. Let's look at this one more time. On December 31st, the value per share has gone from 48 to 46. Now the value of this call option is no longer 3,200. It's now 2,400. So what I need to do is I need to say, okay, what do I need to do to adjust? I'm going to need a credit here, basically for the call option fair value. And this is going to be for 800. And then I'm going to have an unrealized holding gain or loss at 800. Okay, so this will also be to record the change in the options fair value. The next journal entry that I need is to record the lapse of the time value. So this is going to be call option time value for 115. And then I'm going to have an unrealized holding gain or loss over here for 115. And this is going to be to go through and to record the lapse of the time value in the call option. So that's what we're going through and doing over here. Okay. So this last part is that they're going through and settling the option. Okay, so let's go through and try to go through and figure this one out. Okay, so the first thing we want to go through and do is to deal with the time value prior to, or the change in the time value prior to the sale. So on the date of sale, okay, so on this date of sale as of 1/15/20, okay, the value of the call option was at 30. So over here, I first need to go through and to adjust basically for this time value, right? So what I'm going to go through and do over here is I'm first going to be adjusting this. Is I'm going to say call option time value. Basically over here for 35, and then I'm going to be going through and debiting the unrealized holding gain or loss, basically for 35. Okay, so that's the first thing that I've gone through and I have done. Okay, the next thing I need to go through and do is to get rid of what is left over here. Okay, now in terms of what's still sitting on my book, so let's kind of figure this out. So on 1/15/20, how much cash am I going to be receiving? Right, so my option price per share is still at 40. My market price is 47, or this thing has a value of 7. So when I settle this option, the way that they're going to be paying me is they're going to basically give me the amount on my profit. And again, this would have to go through in the pen, and this is kind of assuming a cashless exercise. So on 1/15/20, I'm going to be receiving cash. The amount of cash I'm going to be receiving is going to be 7, which is the difference in the share price times 400 shares, or $2,800. Okay. So the next thing I need to do is to now get rid of the call option time value, also the call option fair value. And why is that? Because we've exercised the option, and now these are going down to 0. So over here, I'm going to credit call option time value for 30. I also need to get rid of this call option fair value. I'm going to do this over here by adjusting this on the sale because I've now have exercised this option. So my call option fair value is going to be over here, a credit for 2,400. Okay. So this last part here is that my total debits are not equaling my total credits. So what I'm going to have over here is I'm going to say, well, okay, what's the difference here? And the difference here is going to be my gain on settlement of the call option. And so that's what I would go through and do with this particular question. Okay, so how would this work on an exam? It would look very, very similar to something like this. So great question to go through and review. Hopefully you enjoyed this video here today as much as I did, which I enjoyed it a lot, as I'm enjoying doing all these for you. And I look forward to seeing you on the next video. Have a great one.